So lots of headlines. You'd expect volatility, not so much. Come inside the Bloomberg, you got 1 month, 6-month volatility for the cable rate, nothing.
Nobody cares.
So it's complacency or apathy?
Well, I think it's a little bit of both, right? I mean, first of all, if you think of what Europe does well, it's kick the can down the road, right? Unfortunately, that continues to lead to political paralysis with regard to Brexit, but also other key decisions like, a fiscal union and ways to have more labor mobility. And so if you think from a active investor standpoint, most active investors, unfortunately, have written off Europe. They don't have a tremendous amount of risk there. They're looking at Brexit as a contagion event, but still a mini contagion event, nothing like we had in Q4 with regard to Fed policy, or if China were to have a hard landing. And so when you see these announcements of extensions or less stability in the process, it really hasn't shaken markets nearly as much as the original Brexit vote has.
It certainly doesn't seem to be affecting markets back in the United States. What about the effect on Europe and the European economy? Is there a contagion spreading to Europe? Actually, we had Mario Draghi yesterday, as you know,
yes,
in the news conference, saying that the whole discussion on Brexit, which has lasted now for
a while.
Many years. It's part and parcel of the overall uncertainty that is hanging over our continent. So how much is this really affecting Europe? Because they're having trouble with growth in Europe generally.
Well, yeah, there's a variety of reasons why European investment has slowed down, but Brexit is certainly a large part of it, in that, it's very hard to make 10, 20-year, 30-year investment decisions. It always is, but when you have political uncertainty not only around Brexit, but the yellow vests, and, Macron hasn't exactly been a swinging success in his policy. Merkel's on her way out. The Italian budget situation's messy. So there's a whole host of factors, but certainly at the top of the list would be Brexit. And then let's face it, if you're looking at where to invest globally as a multinational corporation, the U.S. looks a lot better now than it did not so long ago. Well, so all of those factors are weighing on markets.
Well, I feel like maybe a year ago it would be advantage Eurozone. That they had the power when it came to Brexit negotiations, the UK did not. But yesterday I found to be really interesting just the internal strife between members of the EU, right? I mean, Tusk wanted a year and Macron was able to get 6 months, even though he wanted 3. So there's more discord, it feels, within Europe about Brexit. Does that pose a deeper risk on growth? How do you view something like that? Well,
look, I view it very simplistically from a German standpoint, right? They want this to be as smooth as possible. They want UK as a strong export market. They're desperate to restart their auto production. So from their standpoint, they want things to go smoothly. The French have less skin in the game in terms of exports to the UK. They view it more as a nationalistic European kind of project, and if Britain wants to leave, they can leave. So that is one of many examples of the continued political volatility that's present in Europe. That's, even though we have problems in the U.S., which we'll discuss with others later, we're still a huge economy that has a relatively stable political system.